Concerns over the fast-spreading coronavirus, which started in the Chinese city of Wuhan, sent global stocks lower at the start of the trading week. Japan's Nikkei 225 fell over 2% to 23,343.51, while markets in Australia, China, Hong Kong, Singapore, South Korea, and Taiwan were closed for public holidays. As more than 2,700 people in China have been infected by the deadly pneumonia-like virus, the coronavirus is beginning to hit China's economy. The immediate impact was visible in a drop in the flow of passengers. Overall travel on Saturday, the first day of the Lunar New Year, dropped 28.8% from a year ago. European stocks plunged sharply on Monday amid growing concerns over the potential impact of the spread of coronavirus. The pan-European stock 600 tumbled 2.26%, the UK's FTSE 100 declined 2.29%, Germany's DAX shed 2.74%, and France's CAC 40 ended down 2.68%. China's National Health Commission on Sunday said the new coronavirus is contagious even in its incubation period, which lasts up to 14 days, and that the virus's ability to spread is getting stronger. On the data front, German business sentiment deteriorated unexpectedly at the start of the year, reflecting companies' more pessimistic outlook for months ahead. The Business Climate Index dropped to 95.9 in January from 96.3 a month ago. Survey data from the IFO Institute showed the reading was expected to rise to 97.0. U.S. stocks followed European markets down amid concerns that the coronavirus could hurt the global economy, just as it appeared to emerge from the uncertainty of the trade war. The Dow Jones Industrial Average slid 1.6% to 28,535.80, while the S&P 500 index slid 1.6% to 3,243.63, with a Monday low at 3,234.50. The Nasdaq Composite Index shed 1.9% to reach 9,139.31. For the Dow and S&P 500, the daily decline represented the worst daily drop since October 2nd and the sharpest daily decline for the Nasdaq Composite since August 23rd. In economic news, sales of newly constructed homes in the U.S. dropped 0.4% monthly in December to a seasonally adjusted annual rate of $694,000. In currencies, the dollar gained against the majors on Monday amid a widespread risk aversion on the back of rising concerns over the spread of a China virus. The euro-US dollar dipped to early December lows around the 1.10 key handle, which acted as a support zone. The weak Germany IFO data added to the local negative pressure. Early on Tuesday, the pair is making shallow recovery attempts but remains near the lower band of the trading range. Oil prices fell for a fifth session in a row on Monday, settling at their lowest in more than 3 months as the spread of China's deadly virus over the weekend incited fresh fears that the illness could hurt global energy demand. After a plunge to $57.70, Brent had settled marginally above the $58 handle and remains under the selling pressure below $60. Saudi Arabia's Energy Minister Prince Abdulaziz bin Salman said his country was watching to see how the coronavirus might impact the global economy, but that OPEC stands ready to respond if the oil market is destabilized. Also, the cartel is said to be considering extending the ongoing production cuts or even deepening them to stave off excessive price slides due to the coronavirus outbreak in China. Meanwhile, gold prices jumped to $1,588 per ounce, almost a 3-week high, while global stock markets fell sharply. The precious metal eased back afterwards and has settled marginally above the opening level. Early on Tuesday, the bullion is changing hands just below $1,580 and still has the upside potential as risk sentiment remains fragile. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.